If I started investing in 2025, the first thing I'd realize is this. Time is the most powerful asset you have, and once it's gone, you can never get it back. Think about it. Every single day that passes, your money is either growing or it's shrinking, and if you're just saving cash in your bank account, it's probably shrinking. Why? Inflation. Let's say you saved $10,000 in your bank account. 1 year later, it's still $10,000, but because of inflation, what you can buy with that money has decreased. That's the silent killer of your wealth. Your purchasing power goes down while prices go up, and in 2025, inflation is more real than ever. For years, people believed saving money was the smart move. And don't get me wrong, saving is important, but saving alone won't build wealth. If you're not investing, you're not growing. Now imagine this. You're scrolling through social media, and you keep seeing people talking about stocks, crypto, real estate, passive income, and you think, I wish I started earlier. That feeling, that's your wake-up call. Here's the truth. There's never a perfect time to invest. The market will always feel risky. There will always be uncertainty. But the biggest risk is doing nothing. If you had invested just $100 a month into an index fund 10 years ago, you'd likely have thousands today, without needing to pick any stocks or time the market. That's the magic of compound growth. And the sooner you start, the more powerful it becomes. So, if I started investing in 2025, I wouldn't wait. I wouldn't try to figure out the perfect time. I'd just start small, steady, and smart. Because the hardest part of investing is starting. Once you begin, your mindset shifts. You stop seeing money as something to spend and start seeing it as something that works for you, and that moment, that shift, is when you truly begin your journey toward financial freedom. 2025 could be that moment, but only if you choose to act. Before I invest a single dollar in 2025, there's one thing I would focus on first: building a strong financial foundation. Because investing without a plan is like building a house on sand. It might stand for a while, but one small wave, and it all comes crashing down. So here's what I would do. Step 1. Emergency fund. Life is unpredictable. Jobs can be lost, medical bills can come out of nowhere, and your car never breaks down at a good time. That's why I'd make sure I had 3 to 6 months of essential expenses saved in cash, separate from my main account. This gives you peace of mind and protects your investments from being touched in a crisis. Step 2. Create a budget. I'd track every dollar I earn and every dollar I spend. Not to be strict, but to be aware. You can't grow money if you don't know where it's going. I'd look at my income, subtract my necessary expenses, and find out how much I can realistically invest each month. Step 3. Pay off bad debt. I'm not talking about your home loan or student loans with low interest. I mean high-interest debt, credit cards, payday loans, stuff that bleeds money every month. Paying off a 20% interest credit card is like getting a 20% return on your investment. So I'd clear that first before thinking about stocks or crypto. Once these 3 steps are in place, I'm not just ready to invest, I'm financially strong. And the best part? Now, when I start investing, I won't panic if the market dips. I won't need to sell in a crisis. I'll stay consistent because my foundation is rock solid. Remember, wealth isn't built by making quick gains. It's built by avoiding big losses, and that starts with your foundation. Visual suggestions. You, organizing bills or typing a budget in Excel or Notion. Stock video of a house on sand metaphor. Emergency fund idea, cash in a labeled envelope or savings app. a credit card with warning signs or debt-free animation. End scene. You calmly, checking your budget or smiling with peace of mind. If I started investing in 2025, one thing I would never skip is this: learning before earning. A lot of people jump into investing because they hear a hot tip, follow a social media trend, or see someone bragging about overnight gains. But here's the truth: blind investing is just expensive gambling. I would treat investing like any serious skill. Think about it. If you were going to drive a car, you'd learn the rules of the road first. So why would you invest your hard-earned money without learning how money actually works? I'd start by learning the basics. What is the stock market? What are shares, ETFs, index funds, dividends, and compound interest? And most importantly, what kind of investor do I want to be? Am I looking for long-term growth, passive income, or short-term trading? I'd use free resources like YouTube, podcasts, or websites like Investopedia. I'd read beginner-friendly books like The Intelligent Investor or Rich Dad, Poor Dad. I'd watch real stories of people who lost money and those who built wealth, slowly. And here's the cool part: this isn't school. You don't need a degree to invest. You just need curiosity, patience, and the willingness to start small. I'd also learn about risk. Every investment carries some level of risk, but when you understand the risks, they don't scare you. They prepare you. You'll learn how to diversify, how not to panic during market crashes, and how to keep your emotions out of your decisions. Because that's what smart investors do. They don't chase hype. They don't invest with emotion. They make calm, informed decisions based on knowledge. So if I started investing in 2025, I'd take 1 week, maybe 2, to study the basics. Not forever, just enough to feel confident. Because the more you learn, the fewer mistakes you make. And trust me, the cost of a bad investment is way higher than the cost of a good book or a few hours of research. Visual suggestions. You watching finance, videos on YouTube, or reading a book. Cut to search terms like "what is an ETF" or "how to invest as a beginner." Charts showing long-term growth versus short-term hype. Calm background with a notebook showing investing plan. If I started investing in 2025, I wouldn't wait until I had thousands of dollars saved up. I'd start small, maybe $50, $100, or whatever I could afford each month. Why? Because the amount doesn't matter as much as the habit. The earlier you begin, the more time your money has to grow. That's the magic of compound interest. You've probably heard the phrase, "time in the market beats timing the market." And it's true. Most people waste years waiting for the perfect time to invest. But the perfect time is usually now, as long as you're financially ready. I'd open a simple investment account, maybe through a trusted app or brokerage, that offers index funds or ETFs. I wouldn't stress over picking individual stocks. I'd choose low-cost, diversified options that track the overall market, like an S&P 500 index fund. These funds don't promise overnight riches, but they do offer steady growth over time. And that's the goal. Not to get rich quick, but to build wealth slowly and consistently. I'd set up automatic investments, so every month a small amount goes directly into my portfolio. That way, I remove emotions from the process. No worrying about market ups and downs. No second-guessing, just discipline and patience. And here's the thing: starting small teaches you the habits that matter most. Being consistent, thinking long-term, ignoring the noise over time. That $50 a month could grow into tens of thousands, thanks to the power of compounding. So if I started investing in 2025, I wouldn't wait for a raise or a windfall. I'd start with what I have, where I am, and build from there. Because small steps, taken consistently, create massive results over time, and in the world of investing, slow and steady often wins the race. Visual suggestions. You opening an investing app and typing in $50 or $100. Animation of a small tree growing into a big one. Compound growth metaphor, showing how monthly $50 investments add up over 10-20 years. Simple pie chart of a diversified ETF or index fund. Screen. Overlay. Consistency. Perfection. If I started investing in 2025, I wouldn't chase overnight success. I'd play the long game. Real wealth isn't built in a few months. It's built over years, sometimes decades. That's why the most powerful tool in investing isn't luck, timing, or even strategy. It's patience. I'd keep investing every month, whether the market is up, down, or sideways. I'd ignore the noise, the headlines, and the hype, because I know that staying in the game is more important than trying to win it every day. Over time, my money would grow. Slowly at first, then faster. That's how compound interest works. It starts out quiet, and then it takes off like a rocket. There might be years where nothing exciting happens. And that's okay, because I'm not investing for a quick thrill. I'm investing for freedom. Freedom to retire early. Freedom to travel. Freedom to live life on my own terms. If I started in 2025, I know that by 2035 or 2045, I'd be thanking myself for starting today. So if you're thinking about investing, don't just think short-term, think big. Think years ahead, and remember, the best time to start was yesterday. The second best time is now. Visual suggestions. Time lapse showing months or years passing on a calendar. Graph showing compound growth over 10 to 20 years. Footage of someone traveling, relaxing, or enjoying life, symbolizing financial freedom. End shot. You looking confidently into the camera with a smile.